Everybody, Chuck Barone here. Friday, October 14th, 2022. Wrapping up a crazy, nutso, bizarro week on Wall Street. A lot of news today, guys. A lot of very interesting stuff coming out. But always, we just want to thank you guys for your support for the channel, watching the videos, all your likes and questions, and everything you guys do every day to help make the channel a success. We love you guys. We appreciate it. Stock market today, boom, down, giving back a lot of the gains it had in its one-day wonder rally yesterday. Down across the board. Today was not really a big negative news day for the market. I think it's just the exuberant weirdness that we dealt with yesterday went away today, and now markets are behaving as the reaction to the market today was more like it should have been yesterday, I would think. And traders, with the world as crazy as it is, want to not be holding too many long positions over the weekend because the world could change like that. Bond market today, bonds down, crummy day in the bond market, 10-year sitting 4.01%, breaking the 4% barrier, up 6 basis points today. The 2-year just about to 4.5%, sitting at 4.496, just that much away from 4.5%. Now we're getting to almost a 50 basis points spread between these two. It's too much. The spread's too much. So this 10-year is going to catch up, believe it. Rates horrible, getting worse, and the reality of where we're going with rates in this economy setting in the bond market, a bear market, and looking uglier by the day. The dollar today racing right back up, gaining back everything it lost in the weird thing yesterday, ending up at 113.30 on the index. The dollar, just the world champ still, undefeated. No other currency even close. These other foreign governments are going to have to pick up the pace on their rate increases, or they're going to have to convince the Fed to stop raising rates before this dollar has any kind of backing down at all. With a strong dollar today, of course, that's not good news for metals. Gold down today, $21 an ounce to $16.46 per ounce. 1646. Silver down 58 cents to $18.39 per ounce. As I've explained many times, strong dollar, weak metals, weak dollar, strong metals. The dollar's champ. Metals, not so much right now. But I think that, truthfully, metals holding their own, where in the face of this dollar, holding even any kind of value, I think metals want to rally. They just need a reason to. And when this dollar starts to come down, that's going to be the signal that it's on in precious metals. Oil today down big again. I'm just tripping on this market. $85.61 for a barrel of West Texas Intermediate, down 4% today. Natural gas, $6.45 for their BTUs. They're down 4%. Oil had a spike. Boom. It was over $90. It looked like it was going to just spike right back up. Market deciding, not so much. Going right back down into that trough between 80 and 85. Bitcoin today down small, sitting at just under 19,200. I think Bitcoin's looking for direction. The big support is 18.5. As long as it holds that, you don't have to freak out on Bitcoin. If it gets under that, the chart makes it look pretty dramatic from there down. In news you guys need to hear today, some very interesting stuff that I was reading over the last couple of days. First, we had the retail sales today. They came out basically a flopperoo. Last month, retail sales up 0.4%. This month, only 0.1%. So consumers tapped out, pulling back on their spending. Hopefully they're not all tapped out and some people are actually saving some money. That would be a nice thing. But retail sales, even though they still had growth, you can see where this is going. It's now turning the downward slope. I don't really see consumers being super exuberant about spending tons of money right now. Now, you know what'll save retail is the holidays coming up. People are going to do the holidays no matter what the condition of the world is. So we'll see where it all goes, but weakening retail sales. Today we also got a report on import prices, obviously coming down in the face of this strong dollar. Imports getting cheaper, but still a gigantic, trade deficit. So we're going broke less with trade. Great. Interesting, I was reading today that officials from the Treasury have been contacting the major money centers, the major banks, and asking these banks if they need the Treasury to start buying back Treasury bonds to add liquidity into the Treasury bond market. I think this was supposed to be kind of on the down low, people not really finding out much about this. But now it's leaked out, so I think that gives us an idea of where things are going to go if the crisis comes. I think if that's in any way true, which it seems to be, the Fed is not going to do what they need to do to beat back this inflation. I think they may continue to raise rates, but if they're in there buying treasuries, I don't even know how they work that anymore. In the old days, that used to be called monetizing the debt and was something that only the lamest, crappiest, most worst, the crummiest countries who had the least control over their finances, typical banana republic stuff, printing money to buy your own debt. How is that not going to be inflationary? I think the Treasury must have a sniffer telling them that there's going to be trouble in the bond market. I think the tip-off comes from Europe and obviously Great Britain. I have not really heard of anything big in their bond market, any kind of crisis coming. Obviously the market's closed now. We'll see what happens on Monday, because apparently, from what I have not seen anything saying that the BOE, the Bank of England, has now gone back on what it said. It's cutting off the funding in those Treasury into their bond market. We got some really fascinating things coming up. That was disappointing news about the Treasury today. Also worrying news. Liquidity in the Treasury bill market and the Treasury market. It's strange, isn't it? Yields. The amount of money that got put into treasuries to hold yields where they are, and now they're worried about liquidity. Why is that not making sense to me? Some hanky-panky going on in that bond market, kids. Today, I was reading, we had the report, more and more money being pulled out of mutual funds, both bond and equity funds. These funds are bleeding investor cash. Obviously, investors not wanting to be riding this out, converting their funds to cash. Listen to this, guys. This is the 8th week in a row that investors have pulled money out of equity funds and bond funds. This week alone, they dumped $7.3 billion in global equity funds. They dumped $14.27 billion in bond funds. Now, think about what that means, guys. $14.27 billion in bond funds. Now, obviously, not all of those are treasuries. But at a time of interest rates rising, where bond prices are coming down, picture that teeter-totter, rates up, prices down, right? Now, these fund managers are forced to sell bonds to raise cash so the people can redeem their shares, exacerbating their own losses. Same with stock funds. These people have to sell stock to convert these people into cash that they want. Not a great thing for the market. This is starting to now really all link together, and not in a good way. It all seems to play negatively against stocks and bonds. The Atlanta GDP Now Fed tracker. I had to take a peek at that today because there's just been so much mixed signals in this economy. We already believe, because of the 2 consecutive negative quarters of GDP, that we're in a recession. We're seeing lots of signs of recession. We're seeing lots of signs of positive economic news too. I shouldn't say lots, some. Leading, obviously, with companies hiring people like crazy, and earnings. Earnings have not really crapped the bed yet, just because once that happens, then it bombs away in the stock market, guys. Once the market believes that earnings are going to start coming down and ratios are going to go higher, forget it. Stocks are toast. But the Atlanta GDP Now tracker for today says third quarter GDP grew 2.8%. That blows me away, considering the industry I'm in real estate. Well, real estate did not grow in the third quarter. Real estate collapsed. So if you're dealing with that, there must have been some good somewhere in the economy to get GDP up to those numbers. Interesting. I want to see what the official report for the third quarter is going to say. I believe that comes out next week. Lots of data next week. But just remember, guys, I know there's a lot of stuff out there right now on YouTube and everywhere else, what I call end of the world stuff. This stuff where they're telling you that, everything is going to change. It's the end of the world as you know it. We're going to have a gigantic crisis. The dollar is going to disappear. The dollar is going to lose its hegemony as far as being the world's reserve currency. They want to be able to track every dollar. They want, I'm hearing all of this horrible stuff. I tell you, I have my doubts about almost all of it. This is going to be a recession, and it's going to be a painful one. People are going to feel poorer at the end of this because they're going to lose money in their 401s. They're going to lose money in their investment accounts. They're going to give up some of their home equity. Everything's going to be more expensive, so they're going to be spending more to buy the same. I don't see the end of the world here. I don't think it's going to be the end of the world as we know it. Now, let me ask you this. A lot of people believe it's a big thing with the government wanting to control everybody, and I've heard 1,000 different angles on that, but it all boils down to the government wants to get us. I never really ever saw it that way. In my mind, these government yo-yos, they're puppets. They're puppets. They're mouthpieces. They're pretty faces to parade in front of the TV screen. The real power is the donor class, the money people, the billionaires, the guys who write the checks to keep these yo-yos in office. Now let me ask you this. If you're a billionaire, multi-billionaire, 100-billionaire, do you want the Fed to be able to track every dollar you get in a digital currency? What about all your Swiss money? What about all your Cayman money? What about all your other offshore money? What about it? Remember, guys, when you think about something that could happen, apply it to the wealthiest people in the world and ask yourself, is this something they would want? Because they have the veto power over everything. Know that. So kind of condition your mind to thinking of it like that. The government, they're the puppets. All they do is what the rich, the wealthy, the donor class, the billionaire class, that what they tell the politicians to do, that's what we deal with every day, because that's exactly what they do. So remember that. End of the world not coming. Billionaires want to stay rich. They still want to have their money stashed overseas. They still want to be able to hide money from the government. They still want to have all the perks and things that they have now. So I tell you, none of that is going away. Now, you might feel some pain here, the working class guys will, but the system itself, unless you can think of something better for the billionaire class, maybe that would work. But if you can't, know that things probably won't really change much. Just the values and people's ups and downs with their wealth. Anyway, that's it for the week. It's been a crazy long one. Fascinating stuff. Next week, we appreciate your guys' support. As always, if you like what you're hearing, hit the like button. Make sure to ask your questions in the comment section. If you have a more intense question, something a little more specific or personal, ask Chuck Barone at gmail.com. If you haven't already subscribed, double check your notifications. You know, we're doing our algorithm purge here again. We appreciate you guys. Have a great weekend. Go Bills. We got the Chiefs this week. We're going to win. Till we talk again on Monday, guys. Take care. Thanks.